Good morning everyone, it's Jo Fox from Invest Leeds. I'm here today in Leeds at our headquarters, our new office. I thought I'd follow on from yesterday's live about passive income, and more specifically today I'd like to talk about passive income from property and how you can use it to make yourself very wealthy. I've just spent quite a long time doing some figures, and I am going to get them made into a nice graphic that's easy to understand. So if anyone would like that when it's available, maybe in a few days or next week, just send me a message, give me your email, and I'll arrange for that to be sent out to you. So what I've done is looked at, if you're lucky and you've got £25,000 to invest, maybe that's sat in the bank, you've inherited it, or you've saved up or whatever, you've got £25,000 and you're wondering what to do with it. And first I must make it clear that I'm not qualified in any way to give financial advice. I'm just simply explaining what I would do. I'm giving you the info basically, and you can make your own decisions. So you could invest it on the stock market. So you literally put in your 25 grand into, I'd say, like a Vanguard or something that follows FTSE 100. I'm not suggesting to buy individual stocks because that's more like gambling, but something that's safe and where a company going down in value is outweighed by another going up in value. And I've looked at an 8% stock market growth. I've read a lot that it's actually more like 10, so I think that's a conservative figure to use. So if we invested 25 grand for 10 years and we compounded the interest, we're not wanting this money to live off. Investments should be seen as long term, hence I've done 10 years. So 8%, and then all the money that the 25 grand makes, we reinvest in, hence it's compounded. After 10 years, you would have £54,000. We're obviously not counting tax or fees in this. But it just gives you a real good idea. So we've turned the 25 grand into 54, that's £29,000 profit. That's not bad, I think that's pretty good. But I've done a comparison with putting that £25,000 into property. So I've used, just to make the figures really easy, because maths isn't maybe my best subject, I'm much better with words. £25,000 cash deposit and a £75,000 mortgage. So I'm looking at a property, maybe a 3-bed or something in Leeds, in a decent part of Leeds, and that would be worth £100,000. So straight away we've turned 25,000 into an asset worth 100,000. I'm aware there'd be a mortgage on this to pay back, so it's not equity or profit at this stage. But what's interesting is any growth on the asset now is based on 100,000. So remember, on the stock market the gain is only on the 25, but in property we can earn a gain on the whole asset's value of 100, even though it's only cost us 25 to get. I've done the figures at 4% interest only mortgage. 4% again, I think it's quite reasonable. I've just seen there's a lot of deals out there for 2% and so on, but I think over 10 years the interest rates are certain to go up. I think slowly and gradually, hopefully, and I'm not suggesting in any way you get into a lot of debt. Obviously you can calculate your own level of risk. So we've got 100 grand asset now that's cost us 25, and first, looking at the capital growth, again at 10 years at 4% a year. The Leeds market definitely has gone up 4% a year for the last few years that I've been involved. So we're turning the £100,000 asset into a £148,000 asset over 10 years. So we've got straight away £48,000 profit there. It would obviously be profit if we sold. It would be equity if we didn't, and obviously you could get further borrowing against that to invest. So straight away we've turned £25,000 into 48,000. So that's a lot different to the 29 we'd get on the stock market. But as investors, we all know tenants are paying the mortgage and tenants are also providing us some profit. I've not counted for voids and things like that, but at £350 a month profit, which we can easily get in Leeds, I think the mortgage would be like 200. We'd get £650 rent on a 3-bed, so you know the other hundreds maybe for maintenance and so on. So at £350, if we wanted that money to live off, we'd get £42,350 over the 10-year, which obviously it's our money to do what we want with. We can pay our own bills with it, fund our children's private education, get married, go on nice holidays, buy fancy cars, however we want to live. But if you don't need that money to live off, maybe you're doing this alongside a job or other income streams, you could do the stock market theory on the rent money. Invest £350 every month into, say, stock market ISA, and that'll be tax free, or Vanguard funds and that kind of thing. £350 a month for 10-year compounded makes you over 21, nearly £22,000 profit. So not only have we paid 25 grand for a house that becomes worth nearly 150, we also get this profit. So if we add the capital growth, the rent money and the compounded interest on rent money, we've turned £25,000 into £112,000. So let's compare that to 29,000 that's on the stock market. It's a no-brainer. Now obviously use a combination of these two approaches for maximum effect. That's what I do. I'm not suggesting for a minute that it's what you'd do. If you'd like help finding a suitable property, 100 grand for a 3, even a 4-bed house in some parts of Leeds can easily generate you 650 cash flow. Remember, these days we're paying income tax on the cash flow, not on the profit. But despite that, I think property is still a really good investment in 2020, and I still think the standard buy-to-let market is still a good investment. I've not counted here for refurbing the property and converting basements and things like that. There's also other ways you could add value to that property over 10 years. But I've just kept it simple. So this info is now going to my graphics team, and they're going to do one of those nice little images that you see. And like I say, look out for it. If you want to email in and you want the background of the figures that I use, the calculators and things like that, just let me know. And thanks for watching.